Hello, everyone. Welcome. My name is André Cardoso. Thank you for being here. It's always a pleasure to share my work with you, and this time in a video format. Let's try this way. For today, I want to cover a couple of Forex pairs, but we will also approach equities, the cryptocurrencies, but also the commodities as silver and crude oil. Let's start with the Dixie. The dollar index is now facing a very crucial price zone. We have this kind of a shining channel resistance. We are approaching the highs of the channel. We have also the 127% Fibonacci extension at 106.16. So this is also the completion point of a higher degree bearish Gartley pattern. For some of those who are already following me on Twitter, you can see I posted this pattern before, actually before the breakout above this resistance. Once I saw the price approaching these highs again, we start to project the bearish Gartley pattern at 106.16. So basically, this is the 127% Fibonacci extension of this swing high. That being said, we have a bearish pattern completed, which may put some pressure for the dollar index. We have the 38% Fibonacci retracement, which is a default target for that pattern projected or placed at 104.22. We have also the previous weekly fractal resistance at 104.97. So I will not be surprised to see that pullback. We have also the 10 years. Actually, we are trading the default target zone for that head and shoulders pattern formation. We will not ignore the possibility of a retest of these previous highs from October 2023. I will not be surprised to see that, but for now we are facing this 200% Fibonacci extension level. So this is the default target for the head and shoulders, and usually when the market reaches these levels, tends to stall for a little bit or to retrace a little bit, print a kind of a pullback from here will not be a surprise at all for the 10 years after this move to the upside. We have the SPX 500. It's now trading the 38% Fibonacci level. This is a retracement from these lows from January to the recent highs. Obviously, we are tracking this 38% Fibonacci retracement at 50.49. So it shows some potential to form support also there. We have also the German DAX after a false breakout. Let me decrease my time frame to a 2 hours time frame. After a false breakout of the channel resistance, I was expecting a false breakout of support. In this case, it comes in an horizontal support. I was expecting the channel support to be broken. It can happen, but as we can see, we have also a nice bounce from the German DAX in today's section, or today's session. Let's see if it recovers above this previous fractal support for the German DAX. Also, the gold, we have the 200% Fibonacci extension level reached at 28.31. So this is a default target for the cup and handle, as we can see here. But we have also the channel resistance, and I will not be surprised to see a pullback to this major fractal broken at 25.90. So if that happens, it may offer a nice opportunity for those searching for long opportunities. I will track this move to the downside after facing some resistance at this channel trend line, let's say. We have also crude oil. I also published this before a few weeks ago, the possibility to form this very sharp pattern in red at 87.25. Since then, we wait for the retracement towards the 38% Fibonacci retracement minimum. So this is the $80.22 a barrel. Of course, based on the geopolitical tensions increasing on Israel, of course, crude oil may suffer some volatility. And if the situation starts to escalate even more, of course, crude oil may suffer an increase in prices. So any breakout above this daily fractal will put this bearish crab pattern in danger of a failure. We need to take that in consideration. But until now, we have been the price has been respecting the previous highs and the daily fractal at 87, 85. So and since then we're still trading lower. So I still believe there is room for that pullback expected after the formation of this bearish crab pattern for crude oil. Then we have also the pound 124.18. I posted before, and I actually I shared these patterns, all these patterns on my newsletter, my weekly newsletter. A bullish crab pattern also for the pound. We have also a bullish shark pattern at the 224% Fibonacci extension level. So this is a price zone where we should not ignore the move towards the previous weekly fractal support, which was placed at 125.19. So this is a fractal support from February. So a retest of these levels will not be a surprise. This is equivalent to a 38% Fibonacci retracement, which is, let's say, the default target or the minimum target for this red shark pattern. Let me also, before moving forward, let me also tag the default target levels for the bullish crab pattern. So we are talking about the 38% Fibonacci level and the 61.8% Fibonacci level. So as you can see, the default target for this gray bullish crab pattern points to 125.93, which is equivalent or which converges with the 61.8% Fibonacci level, basically one of the targets for the shark pattern printed printed below. So that being said, pay attention to a significant bounce or potential significant bounce for the pound from this price zone. We have also the kiwi, and for the kiwi, we need to understand that we have CPI data later tonight, 11:45 p.m. London time. So this is the same as Portugal. So we have later tonight CPI data, which may impact the Australian dollar, the New Zealand dollar pairs. And that being said, we should pay attention to these actives also. We are now facing a channel support. I will not be surprised to see a retest of this monthly fractal over the event. I'm not sure if that will happen, but if that happens, that may offer a nice opportunity for those who try to uh, at least to try to go long for a small period of time, let's say for a short time. A bounce from that monthly fractal will not be a surprise for the Kiwi. Then let's jump into the Aussie versus the CHF. And that also offers me, uh, let's say, we have similar as the dollar, which has printed a bearish Gartley pattern. We have a channel resistance at 127% Fibonacci extension level. We have also the CHF now completing a sequence where I consider, and I'm not an Elliotician, but I see some basic price behaviors and I try to track them. And one of them is a simple five-wave structure to the upside, where the wave one, or in this case the wave five, it's equal and symmetrical to the wave one. As you can see, it's a symmetrical wave in terms of length. The fourth wave didn't break the first highs, or the highs of the first wave, as it should, in order to consider the sequence of a five wave structure to the upside in an Elliott theory. So as I said before, I'm not an Elliotician. I like to track those possibilities. So that opens a door for at least a three waves structure to the downside. And if I'm wrong, the price will keep trading higher and eventually building a more complex as we used to say, building a more complex price structure, and eventually I will ignore if that happens. But based on what I see, a potential three-wave structure to the downside may emerge for the dollar versus the CHF. Of course, if the Dixie starts to pull back, that may reinforce this move. Also for the dollar versus the Norwegian krone, 10.98, we have a very sharp pattern completed at 224% Fibonacci extension level, right above this previous resistance level. Many traders will position themselves to the upside, expecting more momentum to the upside. This is an exhaustive momentum. I think the formation of this sharp pattern should bring the price back to the Fibonacci levels, at least 1085, back to the previous fractal support, or at least the most recent one in intraday fractal support, printed at 1085. Norwegian krone, bearish sharp pattern also completed. We have the yen pairs. We will approach some of them at this point. A nice V-shaped recovery after a retest of this channel, not a channel supported. This is not a parallel channel. At least I'm not seeing this as a parallel channel. But we have a trend line support reinforced after a threat of breaking not only the horizontal fractal support but also the trend line after threatening to break this structure. We have a nice V-shaped recovery. I will not be surprised to see a retest of the highs of the weekly fractal at this point for the euro versus the yen. The dollar versus the yen is already printing new higher highs, so nothing stops those yen pairs to keep losing against the euro, the dollar, and all others, the pound including. As we can see, a nice V-shaped recovery. We have a potential inverted edging shoulders above this structure support. So a breakout above the daily fractal at 192.97 may trigger more momentum to the upside, also for the pound versus the yen. On the other hand, I still track the possibility for a bullish crab pattern for not only for the Aussie versus the Japanese yen, but also for the New Zealand versus the Japanese yen. We have a nice recovery, very similar to the ones that we saw on the pound and the euro versus the yen. But then the Aussie already pulled back to the weekly fractal resistance again. We are talking about a retest of this fractal from February. Okay, so unless the market, and it's showing some signs of that potential to hold above this 200 moving average, but unless the price holds above this fractal resistance, I will track the possibility. I still track the possibility to print this bullish crab pattern at 98.20. As I said, unless the price still holding above these lows. As soon the price breaks the support level, and if that happens, I will track the possibility for that bullish crab pattern. That bullish crab pattern, as you can see, it may reinforce this channel support, and the same may happen for the New Zealand versus the Japanese yen. Besides the fact that we are already trading below this trend line support, I believe there is also the possibility. Let me decrease into a 2 hours time frame chart for a better perspective. I believe there's also the possibility to reinforce, let's say, the channel or a structure support of an expanding triangle. Okay, this may form an expanding triangle. The reinforcement of this support level may trigger a move to the upside, and that converging with the bullish crab pattern projected at 89.84, it gives me a reason, a motive to pay attention to this price zone. Of course, as some of you already understand, we target specific price zones. When we track specific harmonic patterns, we track specific Fibonacci levels, And this specific trade may offer me nothing more than, let's say, 90 pips, 97 pips. So this is my potential reward. Following one rule, I never put at risk more than what I expect to get or to gain as profits. So if I expect to gain 97 points, it makes no sense to put 124 points at risk. If I'm targeting 156 points, it makes no sense to put 200 points at risk. Okay, let's keep things simple. Target 90 points. The maximum that you are allowed to put at risk is 97 points. Okay, 97 points as profits, 97 points as your risk. Of course, when you are trading harmonic patterns, you should try to minimize your losses, and I do that minimizing my risk, dividing in half. That offers me a 1-2 risk reward approach initially, which means I need to put at least 50 points at or 55 points at risk. And if for some reason the price keeps trading higher above my initial expectations, so I will reduce my risk to break even. I will move my stops to break even, and I will track and maximize my profits that way. Initially, we will target 97 points or 90 points, 95. That's our maximum risk for this specific setup. Okay, I hope that makes sense. Never enter the market to suffer more than what we expect to gain as profits. So Aussie and the New Zealand versus the Japanese yen, both of them important levels to consider, and specific taking also in consideration the CPI data for tonight. Euro versus the Aussie, also taking into consideration the data that may impact the Australian dollar. In consequence, it may impact the euro versus the Aussie. We have also a bearish scrap pattern projected at 166 after the formation of this beautiful butterfly pattern at 63.76. So we are now tracking the potential crab pattern at the golden Fibonacci extension level. We have also the euro versus the New Zealand already approaching the golden Fibonacci level, but I have particularly interest on the 224% Fibonacci extension if reached 181.69. That pattern in particularly may offer me a nice risk reward approach also. Then we have the pound versus the Australian dollar. Also, at this point, we are trading the 88.6% Fibonacci retracement of this last swing low, but I'm not tracking the possible bearish bat pattern at this point. I'm tracking, and I prefer to search for an extension of the last swing low because we have highs above this previous swing low. And that being said, I prefer to search for extension levels. And the first extension level that I will search for is the 113% Fibonacci level of the last swing low. And if there's ratios and if there's possible ratios that offers me a bearish alt bat pattern, I will take that bat pattern into consideration. That came at 194.93, 113% Fibonacci extension. The objective is to remain below this weekly fractal resistance. Okay, I want to see if the price reacts without breaking above these highs from these, let's say, from these heads and shoulders. I need to remain below, and I want to try to take advantage of this pattern. And to finish for today, Bitcoin, I pointed out this possibility at the beginning of the week on my newsletter, weekly newsletter. I posted basically all of these charts and many more But I also posted this potential shark pattern, actually not a shark pattern, it's a crab pattern at the golden Fibonacci level that points at 60K, um, actually 59.5.